Hello, everyone. I'm Allison Zisco on behalf of ART, and our ART talk today is about tariffs. Um, we, as an industry, have been dealing with this for several months, and we're here to talk about some broader based issues such as strategizing and managing relationships with industry partners and customers. So I'm here today with Maria Mullen, the CEO of Hubbardton Forge, Brian Berk, president of the Howard Elliott Collection, and Anderson Gibbons, Chief Revenue Officer of STI Revolution. Thank you all for coming.
Thanks for having us.
So we are recording this post High Point Market, and there have also been some recent changes in tariffs. But again, we're going to speak about some broad-based measures. But let's start out with a very recent rollback of some of the tariffs on Chinese imports. Let's talk about how that impacted your business and whether it introduced new or different problems or has made your life a little bit easier.
Well, for us, sure. So for us, it did impact, we are a US manufacturer, but we do import from all over the world certain components and parts. And frankly, it was a cost savings for us. We knew that something would probably start to break, so we were hedging our bets a bit. We actually held some containers or a container in a bonded warehouse just for a little while, just waiting to see, and it saved us a significant amount of money by doing that. So I would imagine that for most people, it was a cost savings on anything that hadn't already crossed the border. Of course, there's that pain point of maybe you brought something in the day before, which would certainly be painful for anyone.
I think that what has happened kind of segues into your question of what new problems have occurred. So being a importer for the most part, we do a little bit of manufacturing domestically, but most of our products are coming from overseas, and 95% of our decorative mirrors come from China. So similar to Maria, we've been sitting on finished goods for some time now, waiting. And when the administration opened the floodgates on Sunday morning and Sunday night into Monday morning, there was a mad dash to try to get space for containers. And lo and behold, the vessels that normally are in the ports in China aren't there because there's been no volume. So they've either been moved to dry dock or they've been moved to other ports around the world to take care of the demand in those places or repair vessels that needed repair. And it's not like moving an airplane from Dallas to Miami or to Chicago that within a couple hours, the passengers can board and everything's hunky-dory. It's going to take a couple of weeks to reposition vessels. And since everybody is in the same predicament of releasing goods, space is hard to come by right this second, and it's going to take a couple weeks to catch up. So that's problem one. Problem two is our friends in the freight world have seen this as their opportunity to grab some lost revenue. And the spot rates go up every 2 weeks. So you have the 1st and the 15th, and we just had the 15th yesterday. And lo and behold, the rates shot up. So there's two new little obstacles that have surfaced as a result of this decision. The one thing I do want to clear up for everybody, because specifically for China, there's been a lot of, is it 30, is it 55? What is the tariff rate? And I think that in the news, it says it went from 145 to 30, which it did. But the problem is everybody forgets about the original 25 that still exists. Yes, is that priced into existing product? yes, and it's been around for long enough that it's all priced into. But for anything new and anything coming on, it still exists. So that tariff is really 55 plus whatever applicable duties there are. So I just want the community to know what the actual tariffs are. And so really it was 175 that went to 55.
Right. And does this, so the administration is moving forward and making some changes, but does it change your pricing strategy anyway? In other words, do you feel confident now, or are you still, have you changed your strategy again to accommodate for the volatility in policy and pricing?
So
Well,
Hubbard and Forge we didn't change our pricing to begin with, and we're not changing our pricing now. Not because we trust that things will stay the same. I do think that we don't know where things are going to end up. But as for right now, we can absorb what the changes are, and we're not confident to go out with a price change anyway. So we don't think it's fair to customers, and it's just very confusing for everybody to go up and then down and up and then down, and we don't want to do that. Even though for us it's easier than many people because we're made to order, right? So we can price in a per piece way much more easily than many others can, which I don't envy anyone that challenge. But we're just staying pat for right now. And hopefully when we do feel confident, we would make longer term decisions as needed, but we only raise prices when we absolutely have to anyway.
Anderson, you are a domestic manufacturer but you source from China. What is your take on
So
recent changes?
sorry. So yes, Anderson Gibbons, Revolution Fabrics, domestically owned, family-owned mill located in Kings Mountain, North Carolina. So we don't actually source anything from China. We've owned a cut and sew operation in China. We've had a global impact, but about 90% of our yarns are made domestically. Within 300 miles of our plant. No, it's all confusing. Now, depends what market I'm in. So my really promotional kind of starting price point market, mass market furniture, I do import some yarns from Turkey. And so with that 10% tariff, some novelty yarns, it's an interesting conversation. So, Brian and I were talking yesterday, just kind of offline. That 10% obviously hurt me. We didn't increase our pricing. We absorbed it. Turkey, Brazil, countries that have a 10%, that's going to make them more competitive in the North American market. Going to the 30% reciprocal tariff, to be quite honest, I'm glad it happened. I think it adds more uncertainty. The scary thing is, and look, as a domestic manufacturer, I'm glad to finally have some teeth. I'm finally glad to get a little bit of help. We built our whole business on not relying on government subsidies like maybe agriculture and soybeans and all this other stuff. That being said, talking mass market furniture, this going from 30 to 145 creates even more uncertainty. And it's going to be an interesting rodeo for us all. And the good thing about the furniture industry is whenever supply chains shift, there's tons of opportunity. So it is moving from 145. You're probably, as the domestic guy, I'm over here saying rah, like, yeah, make it 180, but it actually made it more manageable for us because it was a little bit on cloud nine. Lot of promises that probably were not going to be kept. Just in terms of the reality of it is 1.4 billion meters of textiles was imported into the United States last year for upholstery fabric, and I can make 500,000 yards a week. Seems like a lot, but there's very little capacity from the domestic upholstery side of things. So it needs to come down a little bit. And be a little bit more fair, in my opinion. But that's just me.
Brian, I'm curious. Some people have started to say that this reduction in tariffs on Chinese imports has made China, where many people are obviously well established and have good relationships, a favorable option again. Do you feel that way?
We, in the last several weeks, obviously out of necessity, we've been very, very busy pivoting to other countries. Even our Chinese factories that are moving to other countries or moving like product from to the same thing. If we're selling, a pen from, factory A, and then factory A is moving their facility to another country, the cost of making the pen is 15 to 40% more depending upon the country and situation that you're in. Despite that, there's so much uncertainty, and the market doesn't love uncertainty, and you don't want to be stuck in a situation wherein one change in climate of the mood of the administration on either side can seriously impact our business. So how do you plan? So we have started to pivot. We are continuing to implement that strategy so that we are not so dependent upon the Chinese market and the whims of either administration. Is China more favorable? I've worked this math backwards and forwards and forwards and backwards 17,000 times already, because of the changes that keep making so rapidly. And, you're trying to maintain your core assortments, because without your core assortments, it's hard to keep the lights on. So in implementing that strategy, yes, we've released goods in China, just like Maria's released parts, and you got to keep the flow going. So yes, is this new lowering of the tariff able to accommodate that? Yes. And getting back to your question on pricing, we did implement a price increase on April 1st, which took into consideration the original 20% fentanyl Chinese tariff. We have not priced in the reciprocal 10%, nor did we price in the ridiculous numbers. We will absorb that 10%. So we won't be making any more price changes right now. In fact, we'll be reviewing some of the brand new product that we did to see if we can create some reductions in price on those items. So it's a mixture of strategy and implementation and moving where we can and holding firm where we can't.
Speaking of pricing, I think every company has a different strategy about when to change prices, how much to change prices, how to communicate those changes. And I'm curious about your individual strategies in communicating changes. I think correct me if I'm wrong, but there's a sense that there's some tariff fatigue out there, that people are overwhelmed with information, conflicting information, constantly changing. What's your strategy for communicating with your partners about these changes?
I'll let Maria go first.
Well, anytime that we make any price change, we would always give our customers time to implement those. So we try to give everyone 60 days notice. This situation has been really fraught, so I know that wasn't possible for everyone, but we communicate with our customers. We've got very robust email lists, and we sent them a letter this time saying we're not going to be changing anything. And because we were being asked, honestly, I felt if we're not making a price increase, we don't need to say anything. And that didn't turn out to be true, because customers were saying, we need to know what you're doing because there's so much tariff information coming at us. We need to plan how we're going to execute everything. So we let them know that for now, we're not making any changes through an e-blast to each of our channels and all of our customers, and the way we do it normally. And if we were to make a change, we would give the 60 days notice, which is why we're watching these things day to day. We're importing marble from Turkey and glass from Italy and sockets from China and LED chips from Korea and Japan. So it's every single one. There's a lot of levers for us to keep an eye on, because it's changing minute to minute. I feel like it could, you said it could change by the time this airs. I think it could change by the time we finish this conversation.
I agree. Anderson, what about you?
So I want to go back, sorry, Allison, and address the move back to China. And I can only speak for probably the mass textile market, and then also the finished upholstery market. Even with the drop into 30%, I've communicated with customers, and we ship fabric internationally, even fabric made in Kings Mountain, right? And so there's been a mass exodus, a pivot away from China, manufacturing in China. And I think that's going to continue to happen in that sector, even if the tariffs drop just a little bit more. And a big driving factor of that is the administration's policy on country of origin change. There's it's less in the designer space, right? But in mass market furniture, there's a called a kit. It's a reason why we don't have as many sewers here anymore. The policies that we've had kind of in place in the United States is, especially back in the day, you could bring in fabric from China at about 8 to 16%, and you would pay that duty. But the kits came in at 0% duty. Those kit duties now have 10%, so you can take Chinese fabric, ship it to Vietnam, make it into a kit. If that fabric is 43% less than, or if that the product of that kit is 43% less than the total value, you can change the country of origin. And so that is driving kind of a mass exodus, although it might be Chinese materials. It is able to be made in Vietnam, and then of course everybody knows right now with the reprieve, Vietnam, most countries other than China have this 10% rule. So I haven't seen a lot of my customers want to go back to China, and especially with the 30% to 145. It's too large variance, and no one really knows what to do. But I know I went back on a question, so
That's quite all right.
Yep.
Quite all right.
In terms of pricing to our customers, I got to relate with Maria. I mean, we like to call the executives of the company. We did absorb on the lower end part of our market a 10%. It is fun. It is kind of funny in this time of uncertainty. You would think if you don't have to send an email, people would just assume you're not getting a price increase, but it is adamant to just have those touch points and to continue to communicate with your customer. Hey, we're not going up on price. This is where the yarn's made. Now I will say I do have some, because I absorbed that 10% from Turkey on that entry level product of mine. My margins are less, but again, kind of my marketing strategy going into this is just like, be the stable supplier. I'm fine to lose some margin. I just want to be the stable supplier, and hopefully through volume, make up some market share to make that worth my while.
I think just the transparency is key and critical, and as much noise that's out there in the news and the media, creating a little bit of clarity for it. Yes, are they getting email after email after email? Yes, they are. And as things change, are they getting more? Yes, they are. We have a two-pronged approach. One with our retail customers that just want to see what is my price. So we've been very clear as to what's been added or not added. And with our hospitality customers, we do, because they're quoting every day and then looking at this months later. I don't want, using the pen example, the pen is still the same price. It's this tax that's at the bottom, and I emphasize it's a tax that again, if you use the sales tax example, if I contracted with you today and, you know, I shipped you 2 months from now and Florida changed their taxes or Texas changed their taxes, I'd have to charge you those prevailing rates at that time. This is the same thing. And so what we've been able to do by pulling that tax/tariff out of the price to show the transparency that we're just passing this through, we're not marking this up, we are losing some margin, as the others have intimated, but we're able to toggle that tariff tax back and forth as the wind blows and these changes keep making. So again, that transparent, hey, we're not gouging, hey, we're not this, because you know, as a manufacturer as well, I'm getting from not Anderson, but from other fabric mills of we're raising this 100%, we're raising this 125%. And I'm like, wait. I do this every day on the other side. And, you know, we have to be transparent and this is on your cost. This is not on your thing. So, you know, for every 10%, it really should be about 3, 4 tops, not 7 to 12. You know, it's just, in all fairness, you have to look at it from the perspective of the customer. And when you are the customer, you kind of see how you're being treated by other suppliers, and you certainly want to not convey that messaging to your customers.
So are you doing a line item or a surcharge for tariffs? Because I know that's a debate in the industry. Some people
Only for hospitality
only for
customers,
hospitality.
because again, the future purchase, it's like adding a future contract to your proposal. And we've had to call every single hospitality customer regarding their order, regarding their quote, and say, this is the situation, what would you like us to do? Some have said, hey, we need the product, we'll pay it. And some have said, no, we're going to hold off. Retailers, designers, my experience with them is they don't like to add percentages. They don't like to add, you know, line A and line B. They want to know, what is my cost? You know, with one caveat, the seasoned buyers love to throw out freight percentages that they had from 25 years ago. They like to throw those percentages back at us, but with that exception, they like a landed cost.
Maria Anderson, what is your take on surcharges versus an overall increase, and what are your customers looking for?
Maria, you can go first.
If we were to put it in and it was caused by tariffs, if we were to implement that, I would do it as a separate line item and then give them a total so that you could also strip it off. Again, this volatility is difficult to keep up with, but I also think that transparency piece is really important. So show them why we're increasing, exactly how much we're increasing, and then be able to strip that off easily and just give them a net price. But again, a lot easier for us because we make things one at a time, and it's really challenging for manufacturers that are importing goods, and you have goods in stock and then you bring goods in at this tariff and other goods come in at another tariff, and then the tariff goes away. It's really hard to manage, and for businesses this is a huge challenge.
So I'll touch briefly on tariffs, and then I'll give you kind of a domestic situation that happened 4 years ago. So tariffs normally aren't this volatile, right? So we would normally put, as a manufacturer, you would just put this not as a separate line item, but with it being so volatile, I think it is very intelligent for anybody affected to make this a separate line item, like Brian and Maria stated, because it is volatile and is changing. I'll give a little bit of from my experience on using these mass price increases as a variable cost. In the pandemic, there was that Texas ice storm, and a lot of my raw material comes from Houston, Texas, because we extrude yarn down there, right? Or make the raw materials there. So I received in 2000 from our supply chain. We buy a lot of polypropylene resin, and we received over 100% increase in 2020. We put that as a surcharge into our product, thinking it would go away, and it never did. It just now with we've all seen, I mean, even California has, I think, gas now less than $4 in some places, which is crazy. I'm just now starting to see a reprieve from those pricing, with the polypropylene index falling so quickly. So it's a slippery slope. It's a fine line to walk. To get back to the conversation, it needs to be a surcharge until we figure out what the certainty is around this. And I would, if you're a designer, if you're a retailer, I would be very patient with your suppliers, because we're all kind of in this together, and we all kind of figure out where the real tariff rate will fall, so that we can all get back to doing some business.
I know we just have a few more minutes. I mean, we could talk about this for a very long time, but two more quick questions. We are coming off High Point Market, which through my eyes it's kind of surprisingly business as usual. And I'm curious about what your feelings about market were, and what your customers' biggest concerns were, and going forward, how you are working together to allay misconceptions, fears, and concerns. Brian, you can go first.
I would say that our customers were looking to what did we have in stock. What they wanted this, and we implemented a strategy shortly before market of creating green borders on our price labels. That meant we had it ready to go, and we put red borders on newer product that was in production, that was stuck in China, that was not readily available. So we put in anything that had a yellow was cautionary, low stock, and we didn't know when we could replenish. So we kind of implemented the stoplight colors to help guide our customers along during market. What I saw was a mass demand for buying what we had, and in many cases placing secondary orders for the orders that had some uncertainty with it. I had some larger customers that wanted to sit with us longer than normal and ask us what our strategies were. I had yet other customers that were adamant that they wanted to stay away from Chinese product. So it was a mixture, but there were obviously a lot of conversations about strategy, and then lo and behold, what's happened kind of whipsawed back on Monday, and some of those customers released their orders that had been sitting, waiting for some reprieve. So that's kind of what I saw during market. I think there was this, the hardest thing in the whole industry is this uncertainty. And it's not just our industry, it's all
Everybody, everywhere.
And this uncertainty is just next to impossible to run your business, whether it's Anderson, whether it's Maria, anybody. How do you create a plan if every time you create the plan, there's a change in the cards get thrown up, and 52 card pickup happens again the next morning?
Exactly.
Maria?
So I would say we spent a lot of time at market dealing with the misconceptions. So the misconceptions are that tariffs don't affect us at all. The other
As a
part of
domestic
that,
manufacturer,
as a domestic manufacturer, but also the tariffs went into place on Chinese steel and aluminum, and the very next day we got increases on American steel and aluminum, which is all we've ever bought. So supply and demand, the supply did not change, but the demand for it went up, and therefore the price went up, much like the container situation that Brian was speaking about earlier. So we're paying more for steel and aluminum, which is of course those are our core elements. And that's something that is kind of silent. I can't put a surcharge on for that. I don't know how long that will last. That's not a direct tariff, but it's a result of these tariffs. So we did our best to explain some of those things. We're happy that we're a domestic manufacturer and that we will be able to continue to supply, and we're not going to be freezing anything, but also explaining that things like sockets are not made anywhere else but China currently, and that all LED chips come from Southeast Asia somewhere. And therefore, anything that lights is coming from someplace other than the US. And at this point, and for the foreseeable future, that's going to be a fact of life. And we're going to have to buy certain components elsewhere. So, you know, we spent a lot of time on that, but I was actually really heartened at how positive our customers were and how it was business as usual, and that they were resilient. Like, okay, we've got these challenges, but we're going to go forward. We're going to do our business. We've been through tough times before, and we're going to get through this one too. And that's what I came out of market feeling actually really good about.
That's good. That's encouraging to hear. What about you, Anderson?
So a lot more bullish. So a lot of conversations about what is STI's capacity, what is Revolution's capacity. You know, to speak kind of to a broader note, yeah, I think the retailers were very positive. I think they shop from stock. I think a lot of them have a really good head on their shoulders. Let's wait and see. Let's not make, you know, rational decisions, but they are making plans to diversify out of China, and a lot of them have moved incredibly fast. We joke kind of at STI that you know, the best weapon that the administration has is the mass market furniture retail buyer. They will do their best to keep prices where they are, and they're really good at doing it. I know Maria and Brian have also probably dealt with many of them. So yeah, no, I think, you know, STI, we kind of also make another joke where we're an overnight success, 60 years in the making, and it could all go away tomorrow. You know, people, we've been around this long without any help. The help with the tariff, although it is a tax, is greatly appreciative, but it could go away tomorrow, and we're going to continue to kind of push our family business forward. So we'll see. I mean, I'm excited for, I think the whole world's excited to get some type of certainty back into the equation, because it's hard to sell furniture when that happens. So, or without that happening. So it was a really good market for STI. Retailers still bought, and like I told Brian yesterday, we'll see what happens.